Nvidia, its market cap recently blew past $3 trillion. Let that sink in for a minute. We're talking about a chip maker that's become the most valuable company on the planet, recently surpassing tech giants like Apple, Microsoft, and Google. And now every investor, every talking head, every Reddit thread is asking the same thing. Is it too late to buy? Or are we still early in what might be the most important growth story of the next decade? Today I'm breaking down Nvidia's monster run, what their latest earnings really tell us, and whether this stock still has room to run or if we're already chasing it at mile 25 of a marathon. And disclosure, Nvidia makes up about 9% of my own portfolio, but I'm not here to hype it, I'm here to make sense of the numbers and help you think longer term. Because let's be honest, when a company moves this fast, there's usually more to the story than just a good quarter. So let's dive in. Okay, quick history check. Just 18 months ago, Nvidia was around a $1 trillion company. Still huge, but today hovering over $3 trillion. That's an incredible surge. It's added more value than Amazon's entire market cap in under 2 years. And what's crazier? Back in 2015, Nvidia stock was trading under $1 on a split adjusted basis. That's right, if you had purchased $10,000 in Nvidia around then, you'd be sitting on well over $1 million today. And the driver of all this? Artificial intelligence. Nvidia's chips power the back end of nearly every major AI system. OpenAI's ChatGPT models, Google Gemini, Tesla's autonomous driving ambitions, Meta's recommendation engines, you name it, it probably runs on Nvidia. This isn't just hype, it's infrastructure. Nvidia is the digital plumbing behind the AI boom. They make the shovels in the gold rush, and right now everyone's digging. Big tech is throwing billions into building AI data centers. Microsoft's AI infrastructure spend alone could hit $50 billion this year. Amazon, Google, Meta, all of them building, and Nvidia is the one supplying the critical parts. This isn't a trend, it's a transformation. And Nvidia didn't just catch the wave, they helped create it. Let's talk about earnings, because Nvidia just released a monster Q1 report. Revenue came in at $44 billion, up 70% year over year and 12% quarter over quarter. That kind of top-line growth at this scale is virtually unheard of. Net income hit $18.8 billion, despite taking a $4.5 billion charge related to export restrictions on its H20 GPUs. That's a reminder that even geopolitical headwinds couldn't stop this train. GAAP earnings per share was 76 cents, but if you strip out the charge, the non-GAAP earnings jumps to 96, and that's an important context. And it shows the underlying business is even stronger than the headline number. Now the star of the show, data center revenue. It came in at $39 billion, up 73% from a year ago. That's where all the AI investment is happening, and Nvidia is at the front and center. But here's the surprise. Gaming revenue hit $3.8 billion, up 42% year over year. That's a new record, driven by the launch of the GeForce RTX 5070 and the 5060 GPUs powered by Blackwell. So while AI gets the headlines, the gaming business is still a beast. And yes, they still managed to buy back billions in stock. Nvidia repurchased $7.7 billion worth of shares, showing they're not just growing, they're rewarding shareholders along the way. The company is guiding for $45 billion in Q2 revenue, with margins expected to rebound into the mid-70% range. They're not backing off, they're doubling down. It's hard to overstate how rare this kind of growth is at that size. Nvidia is in beast mode. Nvidia is trading at around 35 to 40x forward earnings and around 15 to 18 times forward sales. That's high even by tech standards. For context, Apple trades closer to 7x sales, Microsoft sits at around 11 to 13, and even Amazon sits under 4 times sales. So yeah, Nvidia is in a league of its own. The question is, are you paying for hype or for real dominance? Now let's be fair, this isn't 2021. Investors are a lot more valuation sensitive now. The S&P 500's average forward P is around 20 to 21. Nvidia is significantly higher, but here's the thing, so is its growth. If you compare Nvidia's triple-digit year-over-year revenue growth to any other mega cap, it's like putting a Formula One car next to a Prius. And here's a stat that gets overlooked. Nvidia now generates significantly more quarterly data center revenue than some competitors generate in total revenue. And it does it with higher margins. That kind of operational dominance is rare. The risk, if they stumble, miss earnings, lower guidance, or if AI spending flattens, the valuation could compress fast. A 20 to 30% correction wouldn't be shocking. That's the trade-off when you buy a stock that's priced continued incredible execution. But what if Nvidia keeps executing? What if Blackwell, their next-gen AI platform, sells out again and data center demand continues its explosive trajectory? then the current valuation might look like a bargain in hindsight. So don't forget this: Wall Street loves narrative, and Nvidia isn't just selling chips, it's selling the dream of a world run by AI. They're not just the hardware, Nvidia is the brand name for the future of computing. So yes, it's priced for perfection, but it's executing like a company that might just deserve it. The bull case for Nvidia isn't just strong, it's relentless. First, AI is still in the early innings of its global rollout. Most businesses, governments, and institutions haven't even scratched the surface of what's possible. If you believe AI is going to change everything from healthcare to finance to defense, then Nvidia becomes less a stock and more like essential infrastructure. It's the picks and shovels of the 21st century gold rush. Second, the moat is deep. CUDA, Nvidia's proprietary software framework, has become the standard for AI development. It's not just about chips, it's about the ecosystem. Developers, researchers, startups, all trained on CUDA. Switching to another platform would be like asking a lifetime Mac user to learn Linux overnight. And third, Blackwell is launching, and the anticipation is huge. Pre-orders and demand signals from hyperscalers like Microsoft, Amazon, and Meta are incredibly strong. This chip isn't just more powerful, it's more efficient, with faster AI training and lower energy use. It's exactly what massive data centers need to scale without melting their electricity bills. And fourth, Nvidia's customer base keeps expanding. It's no longer just big tech. Government agencies, healthcare systems, auto manufacturers, financial institutions, they all want in. Whether it's AI-powered drug discovery, autonomous driving, or fraud detection, Nvidia's footprint is growing in every direction. And fifth, the company's financials are pristine. We're talking 70% plus gross margins, tens of billions in quarterly revenue, and consistent buybacks. They're returning capital while still investing aggressively in R&D. That's the dream scenario for long-term investors. There's also brand dominance. When people think AI hardware, they think Nvidia. That kind of mindshare is rare. Nvidia owns the narrative. In short, the bulls aren't just hopeful, they've got numbers, growth, and momentum on their side. Now let's flip the coin. The bear case isn't just about skepticism, it's about math, momentum, and market psychology. First, the valuation. At these elevated multiples, Nvidia is priced for near perfection. That's a lot of optimism baked in. One earnings miss, a slowdown in guidance, or a shift in sentiment, and you could see a significant drawdown, perhaps 25%, in a short period. We've seen it happen to other high flyers. And second, customer concentration. Nvidia's biggest clients, Microsoft, Meta, Amazon, Google, represent a large chunk of their revenue. These aren't just customers, they're also developing their own custom chips. If they start shifting even 10 to 15% of their workloads to in-house silicon, Nvidia takes a hit. And third, competition is heating up. AMD's MI300X is gaining traction. Google's TPUs are already powering much of their internal workloads. Intel is also working hard to catch up in the AI accelerator space. The performance gap might narrow, and in tech, leadership can flip quickly. Fourth, geopolitical risks. US export controls to China have impacted sales of certain advanced chips to those regions. If these restrictions tighten further, or if China retaliates, Nvidia's growth engine in that specific market could splutter. And fifth, the AI boom itself could see immoderate growth rates. Companies are pouring billions into AI infrastructure, but if the ROI isn't always immediately clear, if CFOs start tightening their budgets or delaying AI spending, Nvidia could feel the pinch. And finally, sentiment. Nvidia has become an incredibly popular, if not the most crowned trade on Wall Street. That works great until it doesn't. When everyone's on one side of the boat, even a small wave can cause a major tilt. None of this means Nvidia is doomed, but it does mean that the margin for error is thin. The bears aren't necessarily calling the top, they're saying be careful when expectations get this high. So what's the smart money up to? Let's pull back the curtain on how institutional investors are approaching Nvidia. First off, some major hedge funds have recently trimmed their Nvidia holdings. But this isn't necessarily a panic move. It's often textbook profit taking. That's not a bearish signal, it's just disciplined portfolio management. On the flip side, other funds like Cathie Wood's ARK Invest have highlighted Nvidia as a core holding, viewing it as the linchpin of the AI revolution. Then there's the passive effect. Nvidia is now one of the top holdings in virtually every major tech and S&P 500 ETF. That means every time someone dumps money into a basic NASDAQ or S&P 500 fund, Nvidia gets a cut. Big asset managers are on board too. Both BlackRock and Vanguard managing trillions between them, held substantial Nvidia positions as of their last filings. And there's something most people miss. Some analysts believe Nvidia is still relatively underowned by active managers compared to its benchmark weight. Given its enormous size in the S&P 500, some institutional portfolios might still need to increase their Nvidia exposure just to stay benchmark aligned. So far, there's no sign of a mass exit. Institutions are rotating. Yes, some are trimming around the edges, but Nvidia is still considered a cornerstone holding across growth, tech, and index strategies. Now, Nvidia currently makes up about 9% of my portfolio. That's a deliberate overweight position, especially compared to the S&P 500, where Nvidia sits at around 67%. I'm comfortable being overweight here because I see Nvidia not just as a great company, but as foundational to the next decade of innovation. Am I buying more right now? No, not aggressively at this valuation after such a run, but I'm not trimming either. I think there's still significant runway here, especially looking at 3 to 5 years. I'm watching demand for Blackwell and beyond, earnings consistency, competitive dynamics, and any signs of a slowdown in AI infrastructure spend. I've seen this before, great companies that look expensive until they look cheap in hindsight. That said, I'm not blindly bullish. If Nvidia misses a quarter or sentiment flips, I won't be surprised by a 20% correction, but I wouldn't panic sell based on that alone either, assuming the long-term thesis remains intact. This company is building the foundations of something massive. That's rare, and I want to be a part of it. So is Nvidia still a buy at these levels? That depends on your time horizon, your risk tolerance, and your conviction in AI. For me, it's a hold, a strong one at that. But if you're thinking of entering now, understand the risks. This isn't a value stock by traditional metrics. It's a high growth, high expectation stock, and high flyers can drop fast. Still, if AI plays out like many of us think it will, this company may still be just getting started on a longer journey. Now let me know your take in the comments, buy, hold, or sell. What are you doing with Nvidia? And don't forget to subscribe. We cover every major shift in tech, stocks, and investing strategies, always with a long-term investor in mind. Thanks for watching. See you in the next video.